Welcome back to the Global Business Report here on Arise News. I'm Idia Isian, coming to you this morning from Nigeria's commercial capital, Lagos. Joining me in the studio to discuss Nigeria's fixed income, foreign exchange and the cement industry is Bolaji Balogun, the Chief Executive of Chapel Hill Denham, an independent investment banking and securities trading firm, and also the chairman of the board of directors of Lafarge Africa Plc. Good morning, Bolaji.
Good morning, Idia.
Welcome.
And thank you for having me on your show.
Thank you for coming. It's such a pleasure to have you.
Very delighted.
Now, let's start with the foreign exchange markets. December is the month when the Naira usually gets stronger in the market due to forex remittances from visiting Nigerian friends and family members. And of course, there is a major flow of forex to BDCs. Now, our external reserves has increased by about 0.75% after an extended period of depletion.
Sure.
Yet, the Naira has lost 3 to 4% of its value to now 370 Naira to a dollar on the parallel market. And we're also seeing that full import and export window of the CBN. Why is all this happening? And are traders and investors getting jittery?
So I think fundamentally you have a market where we're very significantly dependent, unfortunately, on sizable portfolio flows. You know, when you have, the big elephant, of an electoral calendar ahead of you, it's no surprise that you would see some of those foreign portfolio flows, continue to take a watching view on the market. I think as an economy, we're going to have to go through a very fundamental reorientation. And a reorientation where we focus on, essentially deepening, domestic financing markets very, very significantly, increasing substantially local savings and pools of capital, and get to a place where our focus is less on currency and our focus is more on developing the economy.
Exactly.
We're going to have to decide what we prioritize. If you live in an economy that's already 200 million people today, that will become 500 million people over the next 30 years. FX is important, but frankly, it's unimportant. The real priority that we have as an economy is to do the things that will create jobs in this economy. And there's a tried and tested and proven model, for me all over the world. And I find it really, really hard why it's difficult for us
to implement
as a nation to implement it. And that model, very simply, is that when you look at the base of your economy, you recognize that you're a monocultural economy. You're very dependent on oil and what happens to the oil price. You then have to figure out what do you need to do to diversify the economy. Talking about it doesn't diversify an economy. What you have to do, very simply, is to focus investments in a sustained and rapid way into infrastructure. And what that investing in infrastructure does, and if you focus it in 4 key areas, you start off focusing on power, transportation, gas and energy infrastructure, as well as what I describe as the infrastructure of the youth, which is broadband. Investing in all of those 4 segments begins to catalyze significant investment activity by the private sector into a number of sectors. That activity will come into agriculture, activity will come into mining, into retail, into SMEs, into even areas like healthcare and education, which you wouldn't normally think of as investable sectors, and ultimately also even into areas like security. To secure a nation properly anywhere in the world today, it's all about cameras and listening devices. Both of those elements, as an example, are powered by electricity and, on the second hand, broadband. If you want to turn your agriculture from what it is today, which is low value, you've got to invest in power. You've got to invest also in transportation networks. That's what takes agriculture from a low-value base into an exportable, high-value base. When you make those investments in agriculture, all of those other investments come in. That's what enables you to diversify your economy. When you then have, the investments going in, there's a very simple thing that happens. You begin to create hundreds of thousands, then millions of jobs If you are going to be 500 million people, that is your most important priority as an economy. FX, will take care of itself. When you catalyze investment activity, firstly, all the FPI that comes in into those sectors because you're investing in infrastructure, the FPI that comes into your infrastructure to support local currency, which would be the bulk of your financing of infrastructure, all of that increases reserves, creates a more stable exchange rate, then all of those segments that you financed in will generate economic activity, will generate foreign exchange receipts, because on the one hand, you are replacing imports, so there's a very significant import substitution effect that happens. On the second hand, because of the investments you've made in infrastructure, your agriculture and your mining become exportable, so your foreign exchange receipts increase. And when you do all of that, you create millions of jobs. When you create millions of jobs, those millions of jobs in return begin to increase savings, begin to increase pensions, they increase demand for housing, and that's how you end up creating sustainable prosperity.
Can I first just say that you should be running for president?
I can't afford to.
Okay, fine, well enough. Now, what about the U.S. Federal Reserve and its interest rate hikes in recent months? Then there's, of course, the issue of oil prices, which have fallen drastically due to the geopolitics, of course, in the Gulf region. Is there any connection between what's happening in the United States as well as the oil markets and the fortunes in the Naira?
Absolutely there is. You have a maverick in the White House, and we can't control what America decides to do in terms of its choice of leader. But certainly we can control what is within our own control. And yesterday we would all have missed, perhaps many people didn't. A very interesting announcement where Qatar says in January we're leaving OPEC. It's about two things. One of it is the geopolitics with Saudi Arabia, which I think is a well-understood scenario. But the second issue is that Qatar has invested very substantially in its gas reserves. Nigeria has very significant gas reserves. And we're not investing. And we're not investing in it. We haven't created, for how long have we been talking about a petroleum industry bill? In the time that we've been talking about that petroleum industry bill, there is close to $100 billion going into Mozambique, into two significant gas projects. And this is how private capital all over the world works. If you're ready and you're prepared for it, it will come in your direction. True. But if you're unprepared for it and you don't have the policy that supports it, it will not come in your direction. The third thing, to my mind, is that we've also created an environment where, rightly or wrongly, it sounds like, as a nation, we're speaking with two sides of our mouth. So on the one hand, we say that we want to attract investments. On the other hand, as an economy, we haven't necessarily shown that we're very supportive of big investments here. And when you create that sort of uncertainty, and I'm very, very sorry to say that a large part of the recent challenges that we're seeing in the FX markets actually started off, unfortunately, with some panic around the two significant fines that MTN had. Whether you and I like it or not, MTN Nigeria is a poster boy of Nigerian investment. It is a company that demonstrates how if you invest in this country, you can reap very, very significant rewards. If you're a minister of finance, every time you go on the road, you should actually be carrying MTN with you. Because to a large extent, instead that company has become, unfortunately here, vilified. And every time that you take steps like that, other investors watch them. So people sit and they wonder, so I used to have this thing called a CCI. Is someone going to come and meet me in 5 years' time and say that there's something wrong with the CCI I got? And when you created that, and then you had all of the geopolitical issues happening, and oil prices also began to tail off, there's only one result in Nigeria's FX. And I think what we have to do is to be conscious of the fact that we need to create the runway for investment capital flows, to come into this country comfortably, safely, because we cannot do it on our own. And why do I say so? If you look at the government's wallet, and if it was well spent, it might do something. But the government's wallet is wholly inadequate. What do I mean by that? This year's budget, it's probably our largest budget in Naira terms. That budget is effectively just under 7% of the nation's GDP. If the budget is 7% of the nation's GDP, then, and you also think about the biggest pool of capital that we've formed domestically, which is our pension funds, are primarily invested in government securities. So 80% roughly of their investments are buying government bonds and treasury bills. You have to ask yourself a very simple question. Who is financing the other 93 or 94% of this economy? And if you don't begin to focus on the things you do that get capital flowing to all of those other segments of the economy, you have no chance of developing this economy. If you don't develop this economy and population continues to grow at a faster rate than the economy is growing, we will have a serious challenge. There has never been, I certainly think we have the ability to turn it around quickly. There has never been in the history of the world a failed state of the size and scale.
So what more should the fiscal and monetary authorities do to grow the economy?
So to a large extent, firstly, we have to be very, very focused, one, on how we get financing into infrastructure very, very quickly. We have to set some pathfinder projects in those 4 areas that I've spoken about. It's when you do that, and you do it with world-class partners who can come and deliver the projects very, very quickly, that other investment then follows. Domestic investment is catalyzed. If you had ambitions to add 40, 50,000 megawatts to power and not 20,000 megawatts over the next 5 years, people begin to take you seriously. Now, it sounds like that number is a big number, but actually that number is easily financeable if you create the right enabling environment
for it.
To build 40,000 megawatts of power, you're probably talking $50 billion, okay? Now, we've just raised $2.8 billion in a Eurobond. If you took that $2.8 billion, and rather than taking that $2.8 billion and giving it to the central bank to add to their reserves, you said, with this $2.8 billion, we are going to put it into the Sovereign Wealth Fund.
Yes.
This will be 25% equity, right, by the Nigerian government in the following 15 Pathfinder projects in power, in transportation, in gas networks, in broadband. We are looking for competent operators globally who have developed infrastructure projects of this nature. We're only prepared to sell you 51%, right, in the long term. You may start off at 75%, but as soon as each of these projects becomes free cash flow positive, right, and profitable, you will be obliged to go and sell down 24% to the Nigerian people. Okay? So you're guaranteeing from the onset, firstly, that you found competent people who will come and build the dam infrastructure. You're guaranteeing, secondly, that only 51% of the receipts are going to go out in dividends. 49% of it will always stay in this country, right? Then over and above that, so you put in a tiny piece of equity. So everybody is assured that the government is their backer. Over and above that, you then guarantee the debt. If you do that, you will get $40, $50 billion of infrastructure financed very, very quickly. And if you get $10 billion going into infrastructure every year for the next 5 years, you will change the course of the history of this country. I put it to you that there has never been 1 year in the last decade where we have invested more than $2 billion in infrastructure. And even when we do in the budget, the bulk of it is past due contractor debts. It's not new projects.
It's not new projects
that we're delivering.
Well, Bolaji, I have so much more to discuss with you, but we have to take a quick break now.
That's all right. You've
been watching the Global Business Report here on Arise News. We'll be back to discuss more of the issues with our guests. Stay with us. Welcome back to the Global Business Report here on Arise News. I'm Idia Isian, coming to you this morning from Nigeria's commercial capital, Lagos. I'm still here with Bolaji Balogun. And it's a pleasure now to be asking you more questions. We know that you're also the chairman of the board of directors of Lafarge Africa Plc. And we noted that Lafarge shareholders have approved a 90 billion naira rights issue. What informed the decision by the company, and when is it likely to take place?
Okay.
Also, is there a market appetite for this rights issue at this point in time?
Sure. So I think the first thing is to say that, this is part of a process of deleveraging the company quite significantly. So going into the recession, we were expanding and putting additional capacity into a plant that we have in Umfamusing in Cross River State.
Okay.
At the time that you started to have, the significant difficulties sourcing foreign exchange, we had to make other arrangements to finance the completion and construction of that plant.
Okay.
The plant is now completed. It's producing cement, at very significant levels. It's creating jobs. It's the only cement plant in the south, and southeast of Nigeria today, and that's a good thing. But we now need to solve, reducing the debt in the company.
Yeah.
So the rights issue, to a large extent, will reduce our debt. Will bring down our debt from nearly $600 million to just over $300 million. In a company that generates cash flows that are slightly north of $900 million, that's a much more sustainable rate. Will it, be attractive to investors?
Will it give you headroom for expansion of your operations?
Absolutely,
okay.
and I think that's the important point. You deleverage essentially to ensure that you free yourself up and provide capacity to be able to finance further expansion.
Okay.
The reality of Nigeria's cement market is that we all know that this will become one of the great cement markets of the world. This market has the potential to be 60 to 65 million tons within a decade. And I'll just give you some, points to support that. So if the government, as an example, started to spend $5 to $6 billion on infrastructure in any year, somewhere around 30% of this infrastructure spend will be cement and concrete. So think about everything. If you're building rail, there's a very significant cement, and concrete component. If you're building power plants, what the turbines sit on, the foundations, the civils, all have a very significant cement and concrete. If you start to focus on delivering affordable housing and affordable housing in significant volumes to narrow Nigeria's 20 million housing gap, again, it will translate into very significant cement and concrete demand. So that's what will continue to drive capacity expansion. And if you want to maintain your market share in what is a very competitive market with 3 capable competitors, you've got to keep investing. Will the rights issue be supported? As you know, Lafarge Wholesome, which is our largest shareholder, own just over 73% of the company. Lafarge Wholesome are committed to taking their own rights. What that means essentially is that the rights that need to be sold are really somewhere around $70 million.
But does the company foresee a stable pricing environment for the expansion of its cement business and favorable economic conditions in the Nigerian markets and South Africa, where it has other operations as well?
So I think to a large extent, Nigeria will continue to be stable from a pricing perspective for a while. And I certainly expect that Nigeria will continue to generate significant cash flows and profitability. South Africa has been a challenging market. There will be a number of things that need to change in that market, including potentially consolidation in the market. You need, probably a strong price leader in the market. You also need the government in South Africa to stop imports. You know, in a market that already has a significant amount of operators and capacity, they're still allowing imports in. And when you think through that process, really, it doesn't add up. To my mind, I think that post-South African elections, when the South African president, Cyril Ramaphosa, is surrounded by much more of what I would describe as his own administration, I would expect that you would see some transition in that market. You would also see a rapid reinvestment in infrastructure because South Africa really has slowed down since the World Cup quite significantly infrastructure investment. And I would expect to see, a pickup in that market as well.
Yes, but in Nigeria, the construction market where Lafarge operates is largely driven by federal and state government projects. So this year, the 2018 budget was passed into law last June, and now I don't think that the federal government has commenced capital releases to the ministries, departments, and agencies to mobilize contractors. So also, with the elections around the corner, there isn't likely to be much impact. A lot going on, rather. So won't this impact your operations? Or has Lafarge already factored all these issues into its projections?
So I actually disagree with you slightly. And why do I say so? The first thing is I've just spent some time telling you about how small the government's wallet is.
True.
And the bulk of that government wallet is not even necessarily well spent, if you pardon me. The bulk of that government wallet is spent on recurrent expenditure and debt service, yeah? Only about 30%, just over 30% of that government wallet is spent on capital expenditure, and the bulk of it is paying contractor past dues. So fundamentally, the growth will come from private sector. The growth will come from private sector, involvement and participation in housing. The growth will come from private sector involvement and participation in infrastructure. And that almost certainly needs to happen if Nigeria is to meet the challenges of the huge population growth that we're experiencing.
Yes, but private sector-led growth is also dependent on government spending.
No, it's dependent on government policy and the framework. It's not dependent on government spending. The government wallet, and this is something actually that I hope that our political leaders begin to understand. That until they do the right things that allow this economy grow, right? And allow investments, to come in a rapid and scaled way, you will continue actually to become less and less important as a government in terms of your financial relevance and significance in this wider economy. If you attract those investments, the government's tax base increases quite substantially. And that's the way that we will increase taxes.
Well, before you came on the show, you were talking about more of what the government needs to do in order to ease doing business. Now, perhaps this is something you would like to speak again on.
Absolutely. I think there's some very substantial work that's been done by the Ease of Doing Business, Council around competitiveness and so on. But it's hardly moved the needle, and there's one simple reason why. The most significant thing that you do that moves the needle in ease of doing business is to invest in infrastructure or to create the framework, for rapid, significant, sustained investment in infrastructure. If we can create the framework, and it's very easy to do it with respect, if you understand how to do it, if you can create that framework that allows capital to come in, even if it's $5 to $7 billion that's invested in your infrastructure over a sustained period, 8 to 10 years, you will lift a significant amount of this country's population out of poverty. You will move the needle very significantly. Of all the elements that has an impact on ease of doing business, by far the most significant is investing in infrastructure.
Bolaji, thank you so much for joining me today.
Thank you very much.
I'm
very delighted to talk to you.
I've been talking to the Chief Executive of Chapel Hill Danam, Bolaji Balogun. That's it for this edition of the Global Business Report. Please keep it here on Arise News. But for now, on behalf of the teams here in Lagos, as well as London and Johannesburg, thank you for watching.